China Evergrande blows up, it's a good thing that we know eventually what was slowing down China. I think China Evergrande is a big factor in, for example, Tesla having sluggish sales in China. It's always good to know what's going on. Hollywood has this thing about horror movies where you keep people on the edge because you're not showing what's really behind the curtain. Once the villain comes out, or whatever the monster or whatever the movie is, you're not scared anymore. And this is very much how it works everywhere else, in particular with the market. So once you know what the problem is, it's much better. It doesn't mean the problem's over. In this particular case, for example, China Evergrande, we're pretty sure. You can never be 100% sure, but I think it's a good situation to analyze in terms of what was happening in the last 6 to 12 months in China, what was impacting, let's say, stocks like Tesla, and what is impacting the market right now as we speak. We are actually pre-market on Monday morning. I'm in Europe right now, so I'm recording this during the day, but the market hasn't opened in the US yet, so we're down about 1% on the NASDAQ future, and our stocks are also down, indicating down, of course, but we'll see how that evolves. This is Not Even Wrong podcast. It's September 20th, 2021. This is Krim Delco. Like I said, we're pre-market, so we're still up 14.4% for the year since the last update on Friday. The market's up 18.8%. We're underperforming by 4.4%. So China Evergrande is a real estate company in China. It's an immensely large company. I actually haven't heard about them myself, but over the weekend, the news came to my attention. I mean, it was going on for a while, but it came to my attention that basically what's going on is this real estate company has problems paying back debt, and that is causing massive turmoil in the debt market. And this is what's now bringing turmoil to the market. That's why we're also down. We're pretty sure that's why we're down in the US. China was down overnight. And the stock, the China Evergrande stock, was down double digits percent. Now, let me give you a brief story from what I know about what's going on. And before I go into the facts, just want to remind listeners, the purpose of this podcast is to give people a sense for what it feels like to run a hedge fund. So this is a good example of a situation where we are impacted by macro, and we are impacted by macro in two ways. One is the short-term situation. Like I said, we're indicating down on the future. The stock market will be volatile, and this is primarily driven by liquidation, by fear, and those sort of things. But then we have also a longer-term impact of something like that, and this is actually a lot more important for us. What I'm alluding to is, for months now, we've been sort of scratching our head. What is wrong with China sales in Tesla, with Tesla in China? Why isn't Tesla able to grow the kind of growth, to show the kind of growth that we were expecting from Tesla? And there was a lot of news and a lot of speculation and competition and that situation with the quality issues that turned out not to be quality issues. All those sort of things were piled up into trying to explain what's going on. Now, when we don't have a good explanation in the financial markets, what often happens is we're just trying to build narratives to kind of please ourselves. I think we human beings, we just need narratives no matter what, no matter how things are actually going on. We always want to have some sort of narrative. And the thing is, those types of narratives are not very helpful in the wealth generation business. Why is that? Because just having an explanation that doesn't really help, it's not, having bad explanations really doesn't help in error correction when it comes to finding the best possible assets or the best possible way to generate wealth. It's very similar to science. If you have a bad explanation for scientific problems, you're not really helping yourself. So if your explanation for the change in weather is that Neptune got angry, if that's your explanation, well, fine. I mean, you have a narrative now, but it doesn't really help you to build a fleet and become a seafaring nation or something like that. If all you do is worship Neptune in order to hope that the weather is good for your ships to go out. So my point here is that good explanations are paramount in science and in the financial markets. And this is a very good example. So we had all these explanations. China is a problem because the quality issues of Tesla. Well, why is that a good explanation? Why is that a bad explanation? Well, how come Tesla is able to do extremely well all over the world, and then they're not doing well in China? What's wrong with the Chinese consumer? Aren't they early adapters? Don't they understand technology? Aren't they also experiencing the superior quality and feeling and all the things that Tesla is able to, the wow effect that the car gives you and the technology behind it? They're not different people. So what's going on here? And therefore, it was just a bad explanation. Then another explanation was competition. Well, yeah, competition can be an issue. You can never underestimate competition. But if you looked, and this was a few weeks ago, I had a podcast about this. If you look at what was going on in China, all the competitors actually, their stocks were also down. It wasn't just Tesla. So if it's competition, then where are those stocks? Why aren't they doing much better than Tesla? So now we have an explanation that finally I think is a good explanation. And that is that we have the largest real estate company in China having been in trouble for months. And what that does is just pushes down purchasing power for people. Now, I don't think that China Evergrande by itself is, even though they're very large, they're not that large in the sense that they can just really squeeze the budgets of everybody in China and sort of slow down sales. But if you take the problems of China Evergrande, which was self-made, China Evergrande is definitely an unforced error, but it's also driven by the crackdown of the central government onto companies. And now in this case, it's a company that has too much leverage. So the narrative is that the Chinese central government is cracking down on too much leverage. Now, I think that's a bad explanation too. But what I could totally stand behind is that the Chinese government is cracking down on companies with too much debt and sort of trying to prevent them from becoming systemic, a la Donald Trump saying, if I have a little bit of debt, then you control me. If I have a lot of debt, then I control you. So I could see that those power struggles within the Chinese government also go towards companies with too much debt. So in that sense, I think I would stand behind the explanation that the Chinese government is cracking down on companies with too much debt. And this one is a particular one, and it's probably the weakest one in the sense that it is the most levered one. China Evergrande not just has a lot of debt in terms of buying land. The reason they have debt is primarily because they buy land. So the way I understand the Chinese real estate business is the following. It is very difficult for real estate developers to get money for land. So it's difficult to get mortgages for land. But on the other hand, if you don't have own land, then you really can't make money in the Chinese real estate market. So the game is that you buy some land and then you rezone it and then you develop it and then you sell the apartments. So what China Evergrande was doing is, because they couldn't finance the land with bank loans, or at least not so easy, what they would do is they would buy a piece of land and then pre-sell the apartments, even they're not even built, and then build those apartments and then use the same pre-sold apartments as mortgage to then buy the next piece of land. So there's kind of a double, maybe triple or even multiple type of leverage on top of each piece of real estate. This is, I think, partly driven by like typical in centrally planned economies. It is actually because the market is not really playing well, because you can't have proper credit to buy land. It's also corrupt in a sense that you really only make money by rezoning land. So there's a lot of intricacies and a lot of obstacles to free market development of this particular asset class, which is real estate. On top of that, you have real estate being a very, very popular asset class like everywhere else in the world. And you have also, it is a very entangled asset class, because what really happens is that, let's say somebody like China Evergrande will go to a province somewhere, a small town, and then sort of promise these people, if you rezone that piece of land, if you give it to me for cheap, rezone it, I build a development, then I think we will, all make a lot of money. And of course, some people then get paid under the table, even though I think that's certainly much more difficult now in China than before, but still happening. And maybe that's one way to bribe people, is to just give them a better GDP growth in their region, so they then get promoted within the party system. I don't know. I think I'm using the Feynman phrase here. If you think you understand China, you don't understand China. Alluding to what he said, Richard Feynman, when he said, if you think you understand quantum physics, you don't understand it. I think I don't agree. I don't agree with the physics side of things, but with China, it's certainly. I think a Westerner. I've lived in China for quite a while. When I was sort of in my 20s, I absolutely have to say that understanding China from a Western perspective is a futile process. Like, understanding China, if at all, it can only happen through the lens of China. You have to spend a lot of time there. And I think Wall Street just looks at it from the lens of Wall Street, and certainly absolutely doesn't understand China. And I think I would count myself also as part of that. So I'm not trying to explain here in detail what's going on within China, but I think these are some tidbits that we can use to understand at least what was happening most recently, and also why we had the slowdown of let's say sales in Tesla. Because if you have a crackdown on a company like Evergrande, China Evergrande, first of all the other real estate companies will either have also be feeling a crackdown, or at least they will slow down with their debt creation and their asset creation, and it will just create less leverage in the system, less money creation in the system, because these types of real estate companies, through the process of leverage, actually act like some sort of extended arm of the banking system, where they can create money by sort of turning around the same yuan several times, using land and real estate as a catalyst. So this would be my first point here. I think I also want to mention that, of course, right now we have a problem, because this has been going on for months, but what's going on right now is that there is an issue with the debt of China Evergrande, and that's much more serious, because if the debt of China Evergrande becomes a problem, in the sense that people are scared that they can't pay back their debt, well, then you have a chain reaction in the market, and then we have kind of a Lehman Brothers type situation, where there is a fire sale of asset, fire sale of debt, fire sale of commercial paper. Everybody gets scared, everybody runs for cash. So this is definitely a possibility, and that's probably what people are scared of right now as we speak. That's why also the markets are jittery, and we have the futures pointing down. Like I said, Nasdaq 1%, and the Dow and the S&P are even more than that. So this is, in a nutshell, what's going on. I think for us, the lesson here is, again, we have a good explanation for why Tesla has been slowing down, which is good, and we're using that as a strength. And we're going to have to deal with the volatility right now. I think lastly, I want to mention that this obviously doesn't affect our portfolio directly. Indirectly, Tesla is affected, of course, like I said, with the sales. But it's obviously not good for a company like Tesla that has a lot of investments in the Chinese economy, when there is, let's say, a real estate backlash, and when there is a real problem with real estate in China. But on the other hand, also we consider that a strength, that we have a washout in the market, and we will have a strengthening of the situation around real estate in China. So for the mid to long term, corrections like that are a good thing, because they wash out bad players. They correct. We need corrections in the market. The markets are error correcting mechanisms, like everything else that we follow, following a Popperian approach to everything we do, including the markets. What that means is that volatility is part of the market. So we shouldn't look at this like, oh my gosh, we're going to have a drawdown. Yes, we might have a drawdown, but this is part of wealth creation. It's not supposed to be a linear curve. And this is a good example of an error correction that is happening in a market that is important as China, that is going to cause some volatility. And then the stronger companies and the stronger portfolios will actually get a lift from that in the mid to long term, and the others will disappear. And that's exactly how it's supposed to be. Thank you.